How's it going, everyone? My name is Darius and this is Carmen, and we are the founders of Wealth Nation. Today we want to talk to you a little bit about the truth of liabilities and assets.
Yes, so I'll break down an asset. An asset is something that puts money into your pocket. So sometimes we think of our possessions as assets, but just take a minute and just relook at those assets, because are they putting money into your pocket or are they taking money out of your pocket? So just to reiterate, an asset is something that puts money into your pocket.
And on the contrary, a liability is something that takes money out of your pocket. So when we think of liabilities, we think of credit cards. When you make a payment, it's taking money out of your pocket. When you make a mortgage payment, that's a liability at the time because it's taking money out of your pocket until you own it and it becomes an asset because the growth in the property. Mm-hmm. So think about all the different things that you currently pay for that takes money out of your pocket. That is a liability.
Yes. So on the contrary, when we think of the banks, who at the end of the day have all of our money, we like to follow breadcrumbs and see what the people who have money are doing. So the banks, they actually think of liabilities and assets slightly differently than us as consumers do. So again, I'll talk about an asset from a bank standpoint. An asset from a bank standpoint are the loans that they lend all of us. Why? Because it provides cash flow to them. They lend the money. Let's say I'm the bank. I lend money to Darius, and Darius is paying me back principal and interest every single month. So assets to the banks are the loans or the debt that they own from us consumers.
Mm-hmm. And the liability to the bank would be your deposit. You think of your deposit as an asset, but to the bank, that's a liability because it's taking money out of their pocket. Mm-hmm. So everything that we think of when it comes to our liabilities and assets personally, it's the opposite for the bank.
Yeah.
So our assets are liabilities to the bank, and our liabilities are assets to the bank.
A little crazy.
Right, because we're taking money out of our pocket, and giving it to the bank. Mm-hmm. So that is an asset.
Yeah.
And a liability to us.
A little tricky.
Yes. So as we go throughout infinite banking and we start putting some thought to things, it's really the opposite way of thinking, because infinite banking teaches us to own our own debt. So we may be taking money out of our pocket, but we're putting it into our personal checking account.
Putting it right back.
So that's putting money into our pocket, so it becomes an asset. Mm. We have the ability to turn all our liabilities into assets just by taking a page out of the bank's book. We become our own banker by doing so.
That's such a great point that you mentioned that, because we kind of go back and forth a lot where we're like, man, whose way is right? But at the end of the day, for us, it's always going to be the bank's way, because they have all of our money. Mm-hmm. And all of the money is in circulation, billions and billions of dollars. Mm-hmm. So again, we're just going to take a page out of their book and we're going to do exactly what they do, but we're just going to do it on our scale. Mm-hmm. So I hope that this information was helpful for you all today. Be sure to subscribe to our YouTube page if you like the information that we're sharing with you. And also follow us on Instagram and Facebook at wealthnation.io. And if you'd like more information about infinite banking, go to our website, wealthnation.io, and register for one of our webinars. We hope that you guys have a great day.